Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, so now that we done got through that disclaimer, let's see if we can catch some pips, or feel free to ask any questions y'all want to ask. The Q&A is up. Y'all already know, since it's only a few of y'all on this call, the chat might not blow up as much, but if you do have a question, go ahead and put it in the Q&A and I'll get to it. A couple of things I want to go over though is, how have y'all been doing? Like, since we've been gone. By the way, the Orlando event was great. I really am thankful that I got to go. So I really enjoyed that. And if I saw any of y'all there, I'm glad to see you. I will not be at the Atlanta event though, of course. Too soon for me to travel, but I'll be at the one next month. So the one next month is in Miami. But Dante will be in Atlanta because he actually is in Atlanta. So if you guys are able to make Atlanta, please definitely go out. Yeah, Mike. Hey, Mike, I'm so glad to finally meet you in person. It was awesome. Let me share my screen. I want to show y'all. I had a couple of questions asked. So I dropped a video on my YouTube yesterday, and oh, Ronnie, you live in Atlanta? Good, excellent, excellent. I'm glad. Definitely be there. Dante, I think Cash will be there. Cash will be in Atlanta too, I believe so. You'll get to see Cash and Dante. I don't know if Nate's gonna make it, but definitely Cash and Dante will probably be there. Especially since Dante could probably go over the Forex and then Cash will probably tag team, go over the binary or vice versa. So, because you know they both do both. So that'll be interesting. That'd be good. You want to get some live trades in. I know y'all can see my AIRO screen. I want to know a couple of things. So as you can see, you see I only got my H1 and my H4 up here. And I think I made comments in the chat that those are the time frames I'm on. I used to have the M15 and the M5 on there. And you know what? It was a waste of my time, me personally. I don't like those lower time frames to just trade off of. I just don't. It's just not me. It don't fit my personality as a trader. So I do best off the H1 and the H4 in a daily if something pops up. So I'm sticking with those time frames. So when we on these calls, those are going to be time frames I'm looking at. All right. It doesn't necessarily mean that it has to be a swing trade for like 2-3 days. That's not always the case. You can be on an H1 trade and it could be done in a day. So it doesn't mean you're always in week-long trades or something when you trade off of those time frames. It just depends on how price is moving. That's one thing I wanted to point out. Second thing I want to point out is the pairs that you see on here are the pairs that I could trade on Nadex, okay? Because I trade binary options on Nadex more so than pocket options, okay? So because these are the only pairs you can trade on Nadex, that's why they're up there. And of course, it's H1 and H4 is because I'm mostly doing daily expirations. So that's why those are up there and not every single pair. And then, of course, you know, I have an alternate dashboard of just the 3 indices. This H4 sell. I'm going to take a look at that. I'm not in that because I already made my quota for the week off of NAS, which, of course, I want to talk to y'all about that too. Okay. So, let's get started. So, first off, I'm in a trade actually right now. I'm in Euro GBP. Y'all are gonna be like, that is a currency pair, Jackie. Why are you in a currency pair trade? Well, this is a shout out to my guy Lex. Um, of course, you guys know I haven't been feeling well this week. So, but I was able to talk with Lex about a couple of things yesterday. And one of the questions he had asked me was like, take a look at Euro GBP. And I said, all right, fine. So I looked at it, and of course, I'm looking off of the H1 time frame. And off the H1 time frame, I said, oh, you zoom out, all right, we on a downtrend, major downtrend, like major, major downtrend, retracement, downtrend, right? So I was like, oh, well, Euro GBP could be selling. However, we were talking about highs and lows, and I was showing the fib, and I noticed, I said, after this major move, it made a low. And if you zoom in, it made this low right here on this candle with this massive wick. I was like, ooh, that looked interesting. Always pay attention to the wicks you see on a chart. All right, them wicks are important. That's where price was at some point. Okay. I'm currently still going through mentorship, the same mentor Nate, and I'm learning lots from her. So a lot of things that I'm able to show you guys, I will, but I ain't gonna show y'all until I'm comfortable enough to be able to talk on it and speak on it and trade on it with y'all. So, but one of the things she pointed out to me was these wicks, and this is a beautiful wick. Why? Because you zoom in, look at this candlestick formation. Look at how strong this bullish pullback is, and this rejection just right here, just boom, off, right? I said, okay, that's something to look at. And then I said, let me draw my fib. I'm walking y'all through this too, because this is exactly how I talked to myself yesterday. Let me see this fib. Let's see this down movement here. All right, let's draw this move. Let's draw this move. So I'm using the fib retracement. I'm gonna go for the high point to that low point. All right, look at this high to this low. And then this is yesterday. So yesterday I'm like right here, and I see prices hanging. And I said, okay, if that thing comes above this 23.6 and closes, what's that? What am I looking for? I'm looking for them fib level breakouts, right? Close above that 23.6. Where's it going? To this 38.2. Okay. I said, and if it does that, might be looking at a trend reversal, because that looks like a peak formation low that just occurred, right? So looking at that, that could be a trend, that could be a whole new trend change, and we might be looking for a push up. All right, and this is all off of the H1. I'm looking at this, right? So then I said, all right, that's that one. Then I said, let me take a look at the H4. Remember, I'm always off the H1 and H4, and I'm gonna get to any questions that's in the chat, in the Q&A in just a second. But I'm in there, and I'm like, let me look at this H4. Same thing. Beautiful downtrend. All right, we had this massive pullback, and then it kept going. So same high, low, but I'm seeing the same formation happening. Look at this rejection, that same rejection off the H1. This is what it looks like on H4. And it turned into not only just a rejection, excuse me, it's probably around here somewhere. Not only to that rejection, but it was like a bullish engulfing candle. I said, oh, it's looking bullish to me. Looking bullish. I said, all right, fine. That's that one. And then daily, look at my daily candle now. Like, okay, this is that same rejection. See how that same rejection on a lower time frame, if you go to the higher time frame, you start to get a little better picture of what's going on. Same thing, we're still in that downtrend, but that rejection. So all right. And then here was the kicker for me right here on the weekly time frame. I got that rejection, we turning bullish, and it's coming off of the support zone. I'm like, oh, this thing might be going bullish for a while. Okay, and I could be just now getting into the beginning of it. So, which is a major zone right here. I said, okay, especially since, look at this. You got a bullish engulfing candle and came back retesting and come on, let it push up. So that's all the reasons why I jumped into this H1 alert off of Euro GBP, because I was waiting for something to alert me that we have momentum in my favor. So because when this alert came out, I was asleep, right? I'm asleep. But well, I was going to sleep and the alert popped up. So this is about 11 o'clock, I think. Yeah, 5, 6, 7, 8, 9, 10. Yeah, so 11 o'clock. So I got in right here, right at the beginning of that candle, right? And then, of course, I had pulled back and now it's pushing up. All because of that walkthrough I just took y'all through is what made me decide to take the buy on Euro GBP, even though it is against trend at a time frame. All right. And that's one of the things that is a problem. And Nate brought this to my attention too. A lot of times people are, they're like, I get into this trade, I'm following the trend at a time frame, but it still fails. Or I miss a trade because I'm following the trend at a time frame, but then I get an H1 alert and it like takes out 2, 3 zones. Like, how do we get around that? So it's kind of like what I just showed y'all, walking through a chart and what you see on the chart and kind of pinpointing highs and lows. And I could be wrong. I could be wrong. That's why I got a stop loss, right? But I could be wrong. But if I'm right, my rightness is going to be a lot greater than my wrong. You see what I'm saying? So that's what I wanted to walk y'all through on utilizing how to possibly get into a trend change. And remember, the trend change is going to start in the lower time frames. So you're going to see the M1 start to become bullish, and then it's going to grow through the M5 as you zoom out. See, it's going to start to build zones. And all the lower time frames, all that means is just the price action. All right. It'll start to grow. So, and then the trend will change. Now, I don't know if it's actually going to get strong enough to change the H1 or whatever. I'm kind of hoping it is, because I'm kind of looking for it to come back up here. But, you know, that's how it looks. So that's all I want to go over on that part. Let me see if y'all have any questions. Let's see. That seemed to form a W on that H1. Yeah, it did. Looks like it. A very slanted one. But yeah, which would be nice. It's the only thing I'm very wary about W's in downtrends. I'm always looking for W's in an uptrend because they're more powerful. But yeah, I can see it. All right, so that's Euro GBP. Let's see here, and why I'm in that trade. So if that's something that you guys have other additional confluences that will make you more confident to take that trade, you can hop into that trade as well. Because it's an H1 alert, it's going against the trend of the time frame. The 50 pip take profit, the 100 pip stop loss that Nate teaches on strategy 2, because this will be a strategy 2. I wouldn't necessarily go by that specifically because this is against trend right now. So you kind of have to do like what I just went through and take it as to what confluences you could see or deem necessary, and look for your stop loss that way. I put my stop loss off that rejection. So if it wants it, it got to come get me, and it's only like 25 pips, so it ain't that bad. All right, so that's Euro GBP. Let's talk about, I don't see anything in the chat yet, but let's talk about NASDAQ in these indices, okay? Let's talk about them because, yeah, I marked that thing all up yesterday. Couple of things happened here that I wanted to go over. So I was in the NASDAQ trade yesterday. All right, not on this account that you see, but I posted it yesterday. It's a different account. This account is a brand new $100 account that I created this week to show people that you can trade currencies and S&P on $100 and make your pips, stick to your compound plan. So this week I might not meet the compound plan for this $100 because I missed the S&P trade yesterday in Forex. I took it in futures yesterday. So, and that's all because I'm all still discombobulated with being ill. So I'm not really on point catching all the different markets like I want to. But let me talk to y'all about this NASDAQ trade. So one thing that I'm going to be doing more on my calls is I'm only taking trades that meet quality setups. Okay. And the reason being is because I'm going to trade what I'm good at. I can scout. Let's not get it twisted. I can scout US 30 and all them, but I don't really have the patience to deal with scalping sometimes. You know, I much rather prefer to put a trade in based off of what I see on the H1 because the H1 time frame and up are dominant, you know, and I like to simplify my trading. Okay. So with that being said, I wanted to make sure I focus more on showing y'all setups that I take specifically. And if there's a setup that comes out on these calls, then we can go for it. If I see one later on, I'll shout y'all out for it. The point is that I want everybody to be able to not only learn on these calls, but also to take these calls. And if we take trades, they're going to be quality trades that's going to catch lots of pips. Since I'm on the H1, I'm expecting 50 pips or higher, you know, 100 pips or higher. Okay. That's what I'm expecting. So I'm not taking 20 pip trades necessarily unless there's breakouts that appear. All right. But I'm looking for 100 pip and higher trades. Okay. With that being said, also is I have that trading plan that I follow. All right. And one of the things that I did on my YouTube video is I did calculations for those of y'all who are paying for your subscription with AIRO, all right, including the trade room. And the price is going to go up, and we all know this. It's been discounted, of course, because of us. And shout out to Dante, you know, for working that out. But it's still a cost, right? So I had to do some calculations to help people out and say, how many pips do you need to catch per week on like a 0.01 maybe to be able to try and cover your AIRO subscription and or discounted it enough, make enough to be discounted so it's not like a burden, right? And especially if you have not done your 3 for free. So if you refer 3 people and they get refer 3 people with the same pass as you get your subscription for free. But if you don't do that, how can I help you guys out to see you can cover your subscription? So I did a calculation anywhere from about 500 to 750 pips per week, right? Will on a 0.01, so that's like $50 to $75, so to speak. Will weekly will cover your AIRO subscription, or excuse me, Access Pass, and grow an account, grow like $100 account according to my compound plan, right? Well, my trading plan, the one that I use, right? So with that all being said, I want to be able to show people this is how you can possibly make those pips. All right. So if you got, like I say, with $100 account, and this is how I do it, I only trade currency pairs in S&P 500. All right. So catching 750 pips on S&P 500 off of H1 trades, it will be hard for me the way I trade. Technically, you would probably need to be scalping S&P like dang near every day to be able to catch 750 pips, or take S&P and a couple of currency pair trades in a week, if it so happens. But that's why I say anywhere from like 500 to 750 pips, and it would be more than likely better to just try and do like 3 for free, or come in with a little bit of a higher balance. Now, NASDAQ though, I've been dealing with anywhere from $350 to $500 accounts. So with that, 750 pips is a lot easier to do, and I'll show you why. All right. So, yes, I got my zigzag on here, and that's only because somebody was asking about how I was using the zigzag with this. So I want y'all to pay attention to this H1 alert that happened on NASDAQ Monday. Okay. This H1 alert happened on Monday. And remember, I told y'all don't be sleeping on these H1 alerts. Okay. So the H1 alert occurred and I took the trade. Because I already had my 3 for free, my subscription is covered. So when it's that, I look to catch anywhere from 75 pips per week to 250 pips per week. And I'm done. I don't need to trade any more in a week. And I live off of that. And so I'm like, oh, okay, well, that's technically one trade a week. If I can catch that on NAS or US 30, shoot, or S&P, that's why I love the indices too. I only need one trade a week and I'm done. Right? Okay. So H1 alert appeared. The only one that was valid at the time, because I looked at the other the other two, and they did not have this H1 alert. Didn't happen on Monday. Okay, it happened on yesterday. I was looking for Monday. See, nothing happened on Monday. All right, and it was ranging. See that ranging? This is S&P ranging, and then it broke out. So S&P didn't give it to me, and US 30 didn't give it to me until yesterday. Okay, so the only one that was set up to give me one was NASDAQ. So I was looking for NASDAQ. So this is Sunday night right here. I'm going to show y'all how you could have cut these 750 pips before the AIRO alert, which is why I was kind of mad because I should have been out the trade way sooner. But I got lazy and I just waited for the alert. So NASDAQ zigzag. This is what I went over on my YouTube video, and I'm going to quickly go over this with y'all. Here is an uptrend. We're on an uptrend on the indices. We all know this, right? Okay. This is Sunday night. This zigzag had dropped, this one. All right. I measured this zigzag, the last upward movement. All right. Use your Fibonacci retracement. Here's your low to your high. All right. Low to high. Hey, Garrett. Low to the high. All right. That's how you use the zigzag to draw your fib. If you don't really know how to measure an upward movement, that's one way to do it. Okay. Make it simple for yourself. All right. So now, then this zigzag had dropped. You're looking at how far back did price move. All right. Here's the zigzag, almost a 100% pullback, almost. Right. But got the rejection right here. The rejection off of there. And here's my 200 EMA. So this is looking lovely. Rejection off of here. Off of what? 88.6. What I tell y'all about these discount fib levels. 88.6 rejection with the closure under the 200. So make sure you zoom in. I'm going to show y'all. This is why I got mad yesterday. I should have been out, but it's cool. This is what you're going to set up for. This is how you're looking for your setups Sunday night. All right. Got the rejection. This is 6 o'clock. This is 7 o'clock. Here's 8 o'clock p.m. Eastern. You got your rejection. I'm looking in. I'm like, all right, close below the 200. I don't know if it's going to continue to drop yet. Maybe it might start a new trend change. So then 8 o'clock happened. Watch that hour candle. It started turning bullish because it came down. It rejected still again, turned bullish. And to me, I can't tell because that's how thick that line is, but it might have been a closure above the 200 EMA. Maybe. Let me make that a little thinner. There it is. Yep. Closure above the 200 EMA right there. Bullish candlestick formation. 2 rejections off of the 88.6. Bullish candlestick formation. Closure above the 200 EMA. I'm in there for the buy. In there for the buy. Next candle. 9 o'clock p.m. Right? That's how I would have done it. And then ride that sucker up. And I'm going to what? I'm going to the zone. Now, this zone wasn't like this yesterday. The zone was actually higher up. It was like up here. Okay, so I would have been like, oh, we're going up here near the 0 fib line. That's where that zone was previously. All right, so it thickened over yesterday. But I would have been like, all right, goal is 0, TP 0. All right, so you in there. How many pips is this, y'all? Get in there, got a little spread, maybe may put you in here. How many pips did I tell y'all need in a week to be able to cover your subscription and still grow your account, right? 750 max, 750 pips on a 0.01. Let's see where it goes, where it goes, where it goes. 750 pips is made in this candle right here. That candle. Before the AIRO alert. Sunday night. Like right after, like, what is this? London Open. Boom, made it. 750 pips. You done for the week. You don't need nothing else. So if you don't have your 3 for free, 750 pips made easy. If you have your 3 for free, you only need what? 75 of those. You could have got those in the first candle. Live off of, right? 1 trade, 1 week, you done. Okay, so I'm mad because I missed that, so I should have been out. But let's say you missed that. So go over that, practice that. Make sure you understand your candlestick formations and these rejections off of these fib lines, because that's how you're going to be able to get into these H1 trades, winning these trades a lot sooner. What you got, Garrett? Are there certain fib levels that NAS or other indices like to retrace and bounce off of? Yeah, I've seen NAS do that 61.8 like clockwork. Like clockwork. 61.8. The other two, S&P US 30, I haven't seen it specifically a fib level. But NAS can usually go to 61.8 consistently. It might go past it. It might go past 61.8, but NAS is really good about going to 61.8. Now that I said that, watch like for the next week. Don't even do that. How do you play stop loss on indices? That's a good question. Indices, me personally, use your fib. I use a fib for it, and I'll tell you. So in that instance right here, this is why this is what's an awesome trade. So in this instance, your fib level, my stop loss would have been the 100% fib level right here. So there was a support zone. As you can see, that support zone got obliterated, but there was a zone back there on that time. So it was under this 100. All right. So I would have been in here. This is where the rejection came off of. Stop loss would have been this fib level line right here. So at that time, this is why this trade was beautiful. Say you would have got in here, and I'm always doing that because of spread. That's 309 pips. 309 pips is what your stop loss would have been, or 310 if you want to make it even. You want to get a little bit saucy, give it a little bit of a break, make it 375. 375 pips to potentially go to 0, which would have been like over 1,400 pips. So that's like a 1 to 3 risk to reward ratio right off the bat, right? But remember, you're only trying to catch 750, so that's still like a 1 to 2 risk to reward ratio pretty much, and you would have got it. You just got to be aware when you're dealing with indices, your stop loss could be higher, especially when you're on an H1 time frame. Because when you're dealing with here, you got to have a little bit more time for a trade to breathe and stuff. You know, you have very little drawdown, of course, at this time, but it doesn't always work out that way. But that's how I use my stop loss. Use a fib for it. If I would have got in right there. Now, I'll tell y'all, I got in way up here because I was lazy. And I waited for the H1 alert because I knew it was coming. Right? So here's the H1 alert. I would have got in right. I got in right here. So now, where is my stop loss in this case? All right, so I'm getting in here. Remember, I'm in the buy, so it's probably put me up a little bit more. So I got bigger drawdown. Where's my stop loss in this case? My stop loss in this case is going to be a lot bigger because trying to find the previous low, which would be like right here. You see how big my stop loss is now? That's like 662 pips. And at the time, I was going to go to 0, which is still 1-to-1 pretty much, right? But that's a big stop loss. So I would have been a little bit wary of it. But that's kind of what I would have been looking at. And these are on 0.01 or 0.1. It just varies, but you just got to look at your stop loss here. And I'm looking for lows, swing lows. I mean, even though this massive rejection wick would have been a nice stop loss too. It's only 419 pips. But again, it's the next hour candle I'm getting in on, and I don't know if it want to come down that far to just push back up again. And I don't want to stop myself out too early, you know. But again, I'm getting in. I'm only going to 0. But remember, you always just trying to catch your pips. Now, you're going to catch 750 pips from an H1 alert? You could. It can happen. But if not, then and if you don't have your 3 for free, catch them what, 75 pips? You would have got it. Same current candle. Same candle. You got it. Catching 250 pips, not that. Maybe you could have got in that candle. We had to wait a while, but you still got it. You know, that's what I was shooting for, 250. Now, let me see. Okay, cool. No problem, Looney. I got you. Span into the 78 and 11. Yes, the 11.5 fib level is something somebody actually just gave me. That's something new. I haven't really worked on it specifically to see how powerful that fib level is. Somebody just happened to give it to me. But these three, 71, 78.8, and 88.6, are powerful fib levels for me. And the reason being is somebody gave those to me as well. We were just talking about fibs. And remember 61.8 was powerful, and then I had used to be 78.6 there, and then nothing. And they gave me those 3 fib levels, especially the 71 or 70.5 is what another fib level a lot of people use. And they were just calling them discount fib levels, and I Googled it, and I did not see very much information on those fib levels. So my thought process was either A, they're whack and they don't really do anything, or B, those things are beautiful and powerful, and they trying to keep that stuff hidden. And so far to me, they've been powerful. So I'm sharing that with y'all, you know. But yeah, definitely. 11.5, I'm still worried about it to see. I'm looking at it more as like a fib level breakout. If it can signify to me that the fib level breakout starts sooner, that's really what I'm looking at, that fib level 4. But yeah, so that's it. You would have caught it. Now, what happened to me is I did not set my TP like I should have. And what happened? Set my TP. I did not set my TP. That thing came back against me. Came back against me to the point where I broke even. Can you believe it? I was like, oh man. So I missed. So when I was trading with the squad, everybody else caught TP, and I forgot because I wasn't feeling well. So I had to wait and do another setup again because I wanted to catch my pips off of NASDAQ. What happened? Came back. What I thought I was going to get into a buy. And what happened? I got caught right in this mess right here. So then I had to take a L. I had to take a loss. So now what happens? Not only do I have to make back my money that I just took a L on because I forgot to set the TP when I try to get back in again, but now I got to make back my money and make my pips for the week, right? This has all happened. I did the video yesterday, so y'all can check it out, but that's what happened. So then I was like, all right, fine. I had to wait for a setup. So I made a setup here during Monday night, got in for the buy, and I caught it. So I was in there on this, made my money back, right? Okay, made my money back, and then I got out when it made my money back because I saw this was happening, rejection. And I said, okay, I don't know if you're really going to go to the zone. So I got out, made my money back, and I was looking for another buy entry. And during this hour candle yesterday, I saw this happening, and it was turning bullish engulfing. You see that? I was like, oh, we getting ready to do a buy on NASDAQ again. It's going to go to the zone, and I'm going to be good. Because remember, the zone wasn't like this. It was still like way up here. I said, oh, we're going to get this buy. I'm going to get in there. We're going to make this money. I'm going to make my pips, and I'm going to be out. Boy, y'all see what happened? I said, oh, I was caught in this. I said, ain't this a mother? So it did not go to the zone. So I had to take another L after I made my money back because this started happening. I said, okay, fine. We're not going for the buy. That's why I said I was feeling salty. However, I saw this happening and I said, is it changing direction? Because I'm going to turn around and I'm going to get in this sell. Okay? I did the videos on YouTube. Y'all can check it out. I'm not lying. So in this, I'm telling y'all this is how I caught the drop. And I'm going to tell y'all this is how I caught the drop so y'all could do it too. All right? Same thing, Fib. So when the drop started happening, you don't know how powerful this drop is, right? It's just happening. Okay? This is what I did. I looked at the daily chart at the time. And it's yesterday. I said the daily chart was there. I said, oh, it's starting to turn bearish engulfing. I said, okay. Especially since it's kind of just hanging up there. All right, it's turning bearish engulfing. That drop is getting powerful. And then I looked at the H4 and I said, remember, 10 o'clock. This is that hour candle with the massive drop was 10 o'clock. The new H4 candle. I looked at it. I said, oh, you rejected off of this resistance zone. And you turning in bearish engulfing. Okay, you going for the drop. You going for the drop. So what did I look at when I saw this happening? I said, this zigzag line had dropped, right? Let's draw the retracement using the zigzag. When that dropped and it was dropping, I got in there right at, I think it came to something because I caught like 500 something pips. I can't remember exactly where I got in at now that I think about it. But the point is, this is what I saw. You're going to have to watch my video to see exactly where it is because this is a different account. This account didn't take NAS. But I marked off here the 61.8 because you just asked me what fib level NASDAQ or the indices go to. I marked off 61.8. I got in as it was dropping because there were zones here on the M5 and the M1. There were support zones. And I said, you know what? You dropping like that with a rejection, you go on to 61.8. Marked it off, and that's exactly where I set TP for. That's how I caught this drop. And this is about 500 something pips that I caught. So if I'm in around here to 61.8, that's about 769. So I must have got in like maybe around here because I caught 500 of that. That was TP. Plus, look at where my 200 EMA is. It was right around there. And that 200 was acting like what? A magnet. You coming to me. So that's how I took that, made my money back, and made my pips for the week. And I was happy. Okay. So net 230 pips for the week. Really wanted the 250, but it's more than the 75. It's more than what I wanted because I usually just go for 75 dip and I'm done. That's how I live off of it. That's how I caught that drop yesterday. And I was out. I didn't care about anything else that happened. I just wanted to make sure I made my money back. But I wanted to do it in the safest way possible with as much knowledge of looking at the charts and what AIRO was showing me. So even though this H1 alert was still good, it wasn't good to the zone because price decided to change around. And that's okay. But as long as you are not trying to be greedy and you have a certain amount of pips that you want to try to achieve, then just take it. Take what the market gives you and then try and find another entry or just go the opposite way, which is what I did. Utilizing the fib, utilizing the zigzag. Okay? So hopefully that helps you guys with why I'm so adamant about the fib and why I'm so adamant about the H1 time frame because it's powerful. Now, looking at NAS today, I don't even know what this thing is doing. But you see this AIRO MA about to close up, about to touch this 200? What I tell y'all before, when them things cross, expect that thing to keep dropping. Expect it to keep dropping. So, especially since we have a breakout of a money zone here in this current hour, this 5 a.m. hour that we're in right now, got a breakout of a money zone dropping. Okay, so if we would have caught that, let's look at it on the M5. Here's the M5 candle that broke, and then it came back, reject. Ooh, look at that, retest and drop. Okay, that's nice. That's a money zone breakout that's happening right now on NAS. If you all want to get in for the drop, you can. um, I'm not, only because this account can't do NAS because of leverage. This is only an S&P account, but because of that, let's go take a look at S&P. But there you go, that's a drop happening right there, and it has a low, so it could be wanting to fill this wick up. If you want to try and catch some pips there on NAS, here's the M1. So you got some room to the M1 zone. This is about 50 pips to the zone here. Ooh, look at that institutional candle right here, though. Ooh, be careful. Be careful. Especially with your zigzag happening this way. See that? This could be a last leg of a W that's forming, especially since it's a little higher. So just be careful when you are scalping off of those. That's why I'm very cautious and I'll just stay up here. That's why I like being up here a little bit better. But that was an M5 break quick, so that was nice. But that's NASDAQ. Let me take a look at this H1. That's probably gonna still keep dropping. Look at this rejection off of the 200 though, right here. Whew, beautiful. Let me see. Look at that. Can we look at H1 S&P? Looks similar. Absolutely. I'm gonna have to go right on over there. Let's look. Yeah, they do look similar. All right. Okay, couple of things to look out on S&P. You don't have a money zone breakout yet. That could happen right here. So I had this marked off because I thought if it was going to break this, that would be like a break of structure, starting that drop. All right, but that's a long way to get to that drop. That's 100 pips to get there. And I marked this because on the H4, it looked like it was a similar thing, like a break of structure that could possibly happen, but kind of played me. So I guess that wasn't it. But I don't want to say that this is actually a bank induction just yet, only because I want you to just take a look at what S&P is doing right now. You had to push up, and then we had this range with the push up and then drop. So I'm actually normally expecting this thing to drop and break the zone to come down here and then push up again. That's what I typically look for because US 30 does something similar to that, and they kind of move similarly. So, but we got this nice massive rejection happening off of the support zone, so I don't know. I would say this. I would definitely mark off this money zone for this possible break. And I'll tell you a couple of things that's happening here. So, let me think as I'm looking at this. Hold on. Go back. Look at the daily. So I'm looking at my daily time frame. We have zag line is drops. We got this bearish day happening here, turning nice and bearish actually. That might be giving us incentive that it's going to continue to drop today. If you throw your fib on it, it hasn't even crossed 11.5 yet. So it's going to be about 70 pips before it crosses that 11.5. If it crosses 11.5 and closes today below that, then I'm bearish, like until the next fib line. Okay, off of the daily. S&P, right? Bearish. However, I wouldn't necessarily think about it in that case just yet. I'm going to go down to the H4, redo the same fib off the H4. Plus, I don't even see an order block yet. If this thing turns bearish, I feel like that'll be an order block that has been formed for a drop. I wouldn't consider this an OB. This is definitely an OB, right? And then it bounced off. So that's the daily. Looking at the H4, same thing, of course. And I definitely have to wait for this H4 candle to see. We got this wick happening. So it hasn't decided yet. Hasn't decided whether it wants to keep dropping or if it wants to turn around and turn bullish again. We're going to have to check it, wait and see on that. I don't like this candle here though. Jeez, I feel like it wants to come back down and fill that. Let me zoom out. Trying to see if there's any imbalances here. Nope, those look like it got filled. Yeah, so it might push down. And look at that arrow in May. If it closes below the arrow in May, then yeah. Interesting. I'm very wary about this wick right now though. This wick off of the support zone. I don't like it. Honestly, I just don't. I don't like it. I don't like this wick rejection off of this thing. Only because of this candle right here. I don't like this one because it started off higher than this. So the opening candle is higher, all right, and it turned bullish, but then it stopped right here. So it formed a lower low and a lower high, I mean, and a higher low. I don't like that. It's like a wedge forming. I'm not the best at wedges. So, and then this rejection is happening here. So I don't like this candlestick formation too much. It's very indecisive to me. So my thought process on S&P at this time, even though NAS is melting out the sky, I feel like they want to go bullish, honestly. And we'll see more at the new 4-hour candle because this candle's about to stop. 7 minutes left, 8 minutes left in this candle. Once this new 4-hour candle starts at 6 o'clock, we'll see what it does. It might turn bullish. If it turns bullish and just keeps going, probably gonna break this high. Even though we real close to the money zone from the day before, and it could probably break low, but you gotta wait for this new H4 candle to start, which will be the new 6 o'clock candle on the H1. So watch. However, last thing I'll show with this fib H1. Look how far back it retraced. 78.8 discount fib level, right? Got the rejection. We got where is my 200? That's what I need to look at. Where's my 200? I don't even have it on this chart. Shame on me, Jackie. Trend 200. There it go. All right. I was like, where's my 200 at? All right. So on this one, we got it came back to the 78.8 rejection right here, right? And then you had this candlestick formation here. Okay. Even though it's bullish, I told you I don't like it. I don't like it because it didn't form a new high. It didn't form a new low. It didn't really do anything. It just stood there, right? And then we got this next candle where we have a rejection happening off of the 78.8 and it's turning a little bullish right now. Might fill this wick. It fills this wick up. That might be a better incentive for it to turn bullish. And then we're going to go back up again. Look at that. I like that. Like that. However, I wouldn't necessarily jump into it until I see what this new H4 candle does, because what this could very well do is turn around and drop. Okay, so even though signs are pointing bullish, be wary. Okay, I would have much rather preferred that rejection come off of this fib level line and then go up. But that's how I'm seeing S&P right now. I'm also wary of it because my 200 is right here. Okay. But it's looking pretty nice for the push up. And if you push it up and it closes above this AIRO MA again, most likely you're gonna get a H1 alert again, pushing back up into the zone. It's 80 pips. So that could be a very nice move here. I'm actually liking this more and more, honestly, now that I see it. Shout out to you who brought the S&P back into my mind. Might be able to catch that. We'll see. I don't like it how it's just acting like it don't know what it want to do. Now, that's that, right? Now flip it. Flip the fib for this down zag line, right? Now look at what price is doing. So this is the first candle. See how it closed? But it's 11.5, like it opened and closed right here. But it already went to the 23.6. No closure, right? So this candle, it closes in the next 5 minutes. Above is 23.6. Most likely going to 38.2. All right. If it goes 38.2, closed, then it might just keep going back up again. Ooh, that candlestick formation is looking pretty nice, actually. So, yeah, all signs is pointing in the favor that it could be pushing back up again. So that's one thing to look at. I would definitely take a look at this one, actually. And depending on how it closes, might hop into S&P and take it to the zone. So that's S&P on that one. Let me check the chat. Saeed, did we take any trades this session? I'm in a trade. I'm in Euro GBP off the H1 alert. That's what I'm on. But not specifically in Nunicat. You're funny. No, haven't heard that in a while. I know bank induction hasn't really been heard or talked about in a minute. But you can see it. It's just what did Nate teach you based on where you're at in the market maker cycle is whether they're valid or not. And the 200 way down here. But if you had to push up, we got the range, and then we got the, like a breakout. So it could be a bank induction, which is going to signify the push up. But you know, it's just kind of have to be wary about it. And now that I was talking, see how that change the candle color, trend color is changing. So it was red, it's going back from red to green, red to green. I would like for it to stay green. All right, but we got 3 minutes left, and I might get into that trade if it stays like that. For real, especially if it closes where it's at right now with this rejection and going to the 38.2, that's 30 pips. So that's at least 30. I want 100 though. I would like 100. So it would need to come up here to give me 100 pips. $10 move. Yeah. So we'll see. But that's S&P. And what else we got? What else we got? Anything else? No, nothing. Okay. Well, I mean, we got 2 minutes left. And that's be careful of that rejection though. I want to hop in, but I would say this too. Matter of fact, before we go, that's the H1 candle looking like that. This is what it looks like on the M30. So let it come. Look how it needs to come out the zone. Look how it's getting close to this AIRO MA. Same thing. Look at the M15. All signs is pointing, turning bullish. But look at this. You got this resistance zone in your way on the M15, which could cause part of a hiccup. And here's your M5. So you could get an M5 upward arrow alert, but you got this 200 in your way as well. So that could be in your favor though. 1, 2, 3, 1, 2, 3, both even zones. It might work. M5, arrow alert off of the support. 30 pips. Didn't I say it was about 30 pips? Yeah. That ain't bad. That ain't bad. Might take that. And what's the M1 looking like? Oh, okay. It's gonna break through that resistance zone then. I don't like this down arrow alert interrupting the move. I don't like that. There you go. Bounce, arrow, go. 6 o'clock. There we are, you guys. So new candle is formed. I'm about to get off. New candle has formed. New H4 candle. There it is. We'll see what happens. H1 candle. It closed above this 23.6. More than likely should be going to this 38.2. So with these rejections, but it's turning bearish. We'll have to see. Look at that M5. I feel a lot better if it gave me an M5 arrow alert pushing up. See how I look at the M1. That resistance zone is causing you some drawdown. And then it should push up to this here. So if it gives you a little bit more strength, then I could probably pop in there. 601. There we go. Look at that. Push up. Let's see what this M1 candle do. Break that zone. Come on. I'm looking to take this trade actually. That's what I'm about to do. See? Rejecting. Shame on you. S&P. Ooh, but look at that. Arrow in May. About to cross this 200. Let that cross up. That'll give you some more movement going up. I like that. So just be aware. I'm gonna get off because I gotta go check on my kids. But this is what I'm gonna do. Got the rejection off the 23.6. It should be going to the 38.2 for a quick scalp. All right. Lower time frames, sitting all up in this support zone, pushing up. Okay. Those are all the signs telling me to push up. Might get an arrow M5 alert. So if you want to just wait for that to give you a push up, go ahead. M1 buy all up in the zone. Of course, that's the second one. It hasn't broken this zone yet, but this M1 arrow MA crossing this 200 will give me the incentive that I want to be able to signify I got some momentum in my favor, which once that crosses, it should be able to give me my M5 alert, all giving me all go signs to go for the buy. Okay, go for the buy. And of course, you're following the trend of the H1 time frame too. So again, that's all giving me incentives to go up. So we'll see what happens with that. And oh, getting close. I know I said I want to get off, but I really want to. This is a little $100 account. I want that cross to happen. Get my cross. And then I'll get in. And then where's stop loss gonna be? Stop loss this is all me trying to get in based off what I see on the H1. This is me getting in on a lower time frame from what I see on the H1. So stop loss for me would be 0, which is about 47 pips. And I'm looking to go to the zone. So yeah, I like that. Did you cross yet, M1? You are crossing. What y'all doing? Yeah, I see it. Yeah, I remember Looney when Nate was, ooh, I like that. Come on, give me this. Yes, turn around candle. I remember that. Yeah, he dropped the Strat 10 video, bank induction. Threw me for a loop when he said it corresponds with Strat 9. I was like, ah, great. Now I gotta study more stuff. Ugh, look at that M1. It's playing. It's playing, it's playing, it's playing. I want this M1 candle to turn bullish. Like, okay, see, I got my cross. All right, so I got my cross, right? I want this cross to be powerful though, and I want this thing to turn bullish. See, it doesn't matter that I got AIRO alerts giving me a bounce AIRO go. Yeah, that's beautiful and that's all good and fine. But I still need the candle. I still need the price action to tell me we still going up, you know? So even though I got my MA cross here, you see, I have downward movement. All right, I ain't trying to be in drawdown unless I absolutely have to. I'm already going to be in drawdown because of the spread. So I'm trying to mitigate that as much as possible. So I'm looking at the candlestick formation now to give me bullish. So zag line drop. This is actually turning strong bullish because you got the wick. All right. So bulls are pushing back up, but I need a candlestick formation to tell me we going back up. Cause see what could happen is even though I got my cross, this thing could turn bearish and then what? Make that cross right back down again and then come down here. That's what I'm trying to avoid. I want something like this. Yeah, see, got my cross, bullish candlestick formation. Come on. And see how it's kind of stopping? So it is what it is. This is what it looks like on the M5. Oh, M5 alert. There we go. Why didn't you not give it to me? Bounce, AIRO, go. Now look at how that M5 candle looks different. But you got that 200 in your way, right? But I got my M5. That candle looks nice. M1. Ooh, that looks better. You see that? See how that looks different, you guys? That's what I'm talking about. And let it push up and see. There we go. Now it's gone. Now I'm hopping that. Ah, you, because it's a new can. What did it do? Yeah. Go. All right. In there. TP1 is here. I'm going to the zone. Stop loss is here. And that is what I'm doing. And we shall see what we do. Stop loss is what, about 50 pips? I think I said it. Yeah. All right. So this is about 80 pips. Yeah. All right. We'll see what happens on this one. I liked it with the rejections, with the fib level breakout, following the trend. That's what I'm liking about it. Me off the H1 going up to the zone, but technically it's really fib level breakout. Just you want to just go to the, I think that's what, like 20 pips, 30 pips. Take your pips and dip if you ain't comfortable going to the H1. But this is just me, and these are my confluences that I'm doing this for. So, and it could very well turn around and go back down. So that is possibly what is going to happen. But this is how I would take that trade, and that's how I see it. Especially if I'm getting in prior to the H1 alert on AIRO that could be appearing. All right, so that's what I'm looking at, y'all. So that is the end of my call today. Let me check the chat, make sure we ain't got anything else. Let me look. Amnia, safest bet is to hold off until that H1 or H4 arrow. I wouldn't necessarily say it was the safest bet. It's just that it's up to you if you wanted to just wait for it, and it would just signify you have momentum in your favor. You could do that. Um, let's see here. Thank you, Rana, for that. And Garrett, let's see. What are the differences between an EMA, simple, smooth, and what is better to use, or how are each used? Gloria, I took a buy. That's what I took on S&P. I love you too, darling. Thank you. I am feeling a little bit better. I'm starting to lose my energy now, though. So but the rest of my family's sick, so I gotta like suck it up. But yeah, I took it off. I took it. I just took the buy based off of what I saw on the H1, and then saw momentum in my favor on the M1. That's what I did. So I took the setup on what I see on the H1, and I went in based off of what price action was moving on the M1. Looney, you funny. Raw sugar. Envy doesn't let me trade sugar. LMFX does, if you wanted to look at that. You didn't get an M1 on the Saeed on S&P. That's okay. It could be the broker that you're using. I'm using Envy on this one. And then Garrett, you had a question about the different MAs. I'm not all that knowledgeable on the different moving averages and how they are measured and determining which ones is better. However, I will say this. I'm going to go to moving average. All right, so exponential moving average, which is what EMA is standing for, I use that more often than not because it is measured based on how price is moving currently. So it is the closest measurement to how price is moving at the current time. Okay, that's why I use exponential because I try to be as close to price as possible because I'm a momentum trading. I'm a momentum trader. So because we use AIRO, and AIRO shows you everything based on how momentum is moving in price, I use the exponential method. The simple method is what it is. It's just very basic, and it just takes the normal measurements of a MA over a period of time, and it doesn't really have any additional weight to it. However, it is a lagging indicator. Of course, the moving average is lagging regardless, but it lags a little bit more when it's a simple. Smooth and linear weighted, I have not used those before, so I don't have a determination on whether they will be better or not. That's something to look up though, because I'm kind of curious now. But I will tell you this. A lot of times, the 200 simple or SMA, a lot of people use to determine trend. So if price is above the 200 SMA, people will say, oh, we're in an uptrend. If it's below it, they'll say we're in a downtrend. I just changed it to an exponential because I like to follow price as accurate as possible closely to signify if we're in a that magnet, you know. So, but definitely look up the other two. Now, if I find out more information on them, I will to let you know. But that's kind of how I use the MAs. Other people probably use them way differently than I would. I'm not sweating that bearish movement on S&P. It is what it is. That's why you need to be cool with whatever your stop loss is. I'll tell y'all that right now. Let's see. One other one. Yes, there you go, Looney Cat. Excellent. Awesome, you guys. All right, I'm out of here. Love you guys. I will talk to you guys tomorrow, and let me know how y'all feel or how that works out with the S&P. Like I said, if you don't want to hold it, and you just want to take it to the fib level, catch your 20 pips, catch your 30 pips, and dip, go for it. And then if you have additional confluences that'll let you hold it, or maybe jump out and catch another one, do so. Okay, but just wanted to make sure. Hopefully, this was a helpful session to you guys, and I will catch you guys tomorrow. Y'all be safe, And I'm probably going to go take a nap. Take care. Talk to y'all later. Bye.